The 18th. Okay, let's go through our trades here. Let's organize them alphabetically by just in the current account. You can find that watch list by just clicking here and you'll see it right away. Current account positions. And then just click here on symbol on this little triangle until it's organized alphabetically. Let's go to Disney. First of all, analyze. Remember to make sure that you have this icon here as well as here, so that every time you click on any of the items in the list, it goes straight to the risk profile or whatever in the Analyze tab for that particular stock. Okay, so Disney, and what I want to do here is a rollover. And all I have to do is select those two that expire tomorrow, February 21st, and say Analyze Rolling. And there it is. And automatically comes to next week. So we are going to change that to March 12th. That's what I did. Okay. So you can do the same. And then I get $341 times 300. So that's $900 thereabouts. 1,023. Okay. And send that off. And we'll wait until it gets filled. Moving on to DLTR. And in this case, we take a look at the chart and we see that earnings are coming up. And so I don't want to be in this trade when earnings come up. Sometimes we do, but because, as you can see here, we are very close to the middle of it. If it was in one of the edges in the lower end or in the high end of the trade, then I would consider staying on as long as you neutralize your deltas. But here at this point, I just want to take my profits and run. Okay, so I'm closing the position. And all I have to do is select the entire set and say Analyze Closing. And that gives me a double diagonal, and then I adjust the price by seller of the sell order. Say Customize, and then change for 4. And that's how I came up with this. Okay, 26.21. And make sure that you get a straight line once you have your current minus the simulated trade, which is closing it. Confirm and send. I would adjust if necessary. Moving on, Intel. That looks great. It expires March 19th and is still well within my range. If it goes above this point here, this what I call the smiley face, which in this case the sweet spot will be 64.52. If it goes above that, I can adjust by selling calls. Right now, there's no point in doing that. Let's move on to Logitech. Okay, first let's take a look at the chart. Now has been a big run up and now it's sort of weakening. Okay, let's take a look again. And then 90s are expiring. Okay, so we have 90s here, strike price 90. But if we were to delete all that, we end up with a, as you can see, this is a ratio spread. Okay, we want to get out of that too, if we're going to get out of it. Okay, so here is what we would do. All right, so let's see the entire trade. Looks like that is delta neutral. We don't need to change anything but the calls here. And you can see that if I close that, I leave that back ratio or ratio back spread, whatever you want to call it, and that alone, if you don't have anything else, is a bullish trade. This is the bullish trade, so you might want to get out, or simply sell one of the calls and then stay with a vertical spread. Let's see, if I were to close this 110, analyze closing, and just sell one of them, you end up with a bearish trade. Okay, so bearish trade plus a whole bunch of puts, which are way out of the money at 90. So I'm going to leave that alone the way it is right now. It looks like this. Okay, but I do want to get out of this February calls that are expiring tomorrow, and I don't want to end up with 400 shares short. So to do that, I'm going to roll it over to my March. Okay, so that gives me 15 cents. So I'm closing that simply because I don't want to have those shares in my account. Okay, just for convenience. Okay, get 15 cents out of that, and we end up with this trade, which is bullish. Let's do that first. Confirm and send. And if it fills right away, which I doubt, then we can, well, it did fill up. Okay, so we have 4 puts short. That's what I'm going to expire tomorrow. 8 puts long, which are not going to expire. So come Monday, we will have 8 long puts, and the short puts will expire worthless. So you can delete that. And as you can see, we have a delta of 29. But if the stock was to fall, we could make additional money. So I don't mind that. Okay? I don't mind that. That's sort of a lottery ticket, because if I was to sell all those puts, all I'm going to get is 15 cents. So I don't mind keeping it as a lottery ticket. And then the back spread. Okay. And the back spread looks like this. And if we sell one of the long calls, we have 2 of them, we end up with a bearish trade. I don't want that either, because the stock could go retest the high and even break out again. It looks very overextended here, so going back to the Ichimoku cloud wouldn't surprise me. You see we have a stochastics that is pointing downward, so I kind of like keeping it the way it is right now, like this. Okay, and then we'll see what happens come next week. What is going to happen is this put will expire, and this is what we end up with. Still a bullish trade. Okay, but if the stock was to fall dramatically for whatever reason, we could make additional money on the downside too. Okay, so let's move on to Microsoft. Microsoft, I rolled it up to 1 call. As you can see, we have 2 calls long at 215 and 2 calls short at 215. So they balance out. I have 1 long call here at 240, and the stock is above 240. Let's take a look at the chart. And Microsoft is doing really great. I think it might continue. Look, the stochastics is pointing down, but I think this, I wouldn't be surprised if we go and retest the highs. Okay, so we can roll up these long calls, keeping the same expiration and just raising up my calls to same expiration, and get almost $5 here in additional money credit. And now we have neutralized our deltas. See, right now it's bullish, 25, but not by a lot, which is fine with me. But since we are way up here, I'd like to take my profits by rolling up that single call. And we can keep on rolling and rolling and rolling it for eternity. I don't care. We keep on collecting money, and that's all that matters to me. Confirm and send, and let's get $480. And that's it. Filled. Let's move on to Qualcomm. And we have March 5th. If you notice, that looks quite bearish, this trade here. Let's take a look at the chart. It may be forming a bottom here at the lower end of the Ichimoku cloud. If it breaks, it might be a good move to the downside. And at some point, you can see that I have these 165 calls. I rolled them up by selling. This is what I did, selling two actually. Two March 145 calls and buying the higher strike price. Now we can revert that because we got almost $13, $12.75 by doing that. Well, we can revert that by buying back the 145 and selling the 165. And we are going to pay a whole lot less for it. And then we end up with the same trade that we originally have. You would want to do that only if you think that the stock will rebound here. And I think it's quite possible, but it may continue down. So I see it as a possibility that it would rebound here because the Ichimoku cloud is at the bottom of it and the stochastic is oversold. A little reversal could happen between now and next week. So I could do that and buy back my position the way it was with $3.97 as opposed to $12.75. And we can do two of them, Brad, actually, not just one. And that's a little too bearish. So let's just do one of them. And that's more neutral. I want it delta neutral. If I don't do that, it's delta negative. Okay, and I think we need to be more delta neutral at this point. So let's just do one, and then next week we reevaluate it, perhaps do the same thing. Create duplicate, and send. Okay. So we took a profit or a credit of $12.80, and now we are just buying it back. So we are essentially securing our little profit on one of the calls. And you still have one long call at 165. It's very unlikely that the stock will go back to that high, but who knows. Let's move on to Starbucks. And here again we have a bearish trade. It's very close to neutrality. Let's take a look. And that's bearish looking. Yeah, I think that it's probably gonna go a little lower. We just try to keep it close to delta neutrality. We could sell puts here. I'm not going to do that. I'm going to leave it alone. Looks great. Let's move on to Target, 12th of March. Okay, this is very close to the cone here, so I'm fine with that. And the March expiration is a month away, so no need to change anything. Texas Instruments, March 19th, looks great too. Okay, I have 3 proposed trades here in my Excel spreadsheets. If you want to get a copy of this Excel spreadsheet that then you can modify, you can just copy and put your own calculations here or your own numbers to see whether you want to trade a particular stock or not. Please just leave a message in the comments below and say that you want to obtain this, and then we'll go from there. Okay, I'll make sure you get one. Okay, so I have 3 potential trades: NUE, DHR, and COF. In the case of COF, this morning you can see here that my long calls had an implied volatility of above 40, and that for me is a no-no, so I don't want to trade that. But let me just show it to you, just in case it has changed. Yeah, you can see that it's 40 here. That's a little too high, so I'm going to avoid it. But that's a stock that is way up there. Volatility is relatively low, speaking in the lower end, but is still too high. So we need a lower volatility before we can trade that. Let's move on to the next is DHR. Let me just copy that. And in this case, the problem is that the liquidity may be a little too low, so then the percentage here, which is the difference between mid and natural, is a little too high. Okay, just the same, let's take a look. And I copy this from the spreadsheet and I click here and here it is. Okay. All right. If you want to enter a brand new trade here, this is definitely a trade. But let's say I want to trade it. I would decide first what strike price and what months I want. Okay. Let's see. Okay. So my strike price is 240 or 235 if there is such a thing. I want to sell March because it's got close to 30 days to expiration. And all I have to do is click here somewhere, decide whether you want the 230 or the 240. I think I want to do the 240 is the closest thing. Then right click and say Analyze Sell, Straddle. And here it is. Okay. That's the sell part. And the long part, you'd say add simulated trades, go down to at least 90 days to expiration. So we can do the June, and let's do this for 240 as well. And in this case, we're going to buy. So to add it to this position, press a control key and then click on the ask. Twice. 2 times for the call and 2 times for the put. Make sure you have the control key pressed and then say 240 for the ask, for the put, once and twice. And that's the trade I want to enter. Okay. And here it is. Make sure that it matches. The cost is $50. I have 49 here, so it has increased. Copy that. Let's take it over here. And let's put 50.08. 50.08. And that's a little too high. You can see that my current net liquid value is 93, and we want to do 10% or less of that. So we can't really do 2 lots. We're going to do just one, which is $50 times 100, $5,000. Okay, everything else should match. Yeah, it's thereabouts the same. And you can see the earnings. They beat expectations by a wide margin. And here is the information you need. 1.8 versus 2.08. And that's 13%. So it's more than 10% beat. Sounds good. And let's enter the trade. Create duplicate and just enter 1 lot. And that's $5,000. We don't want to enter more than that because it will be $10,000. And that's a little too much for me. And there it is, filled. And then the last one is COF. No, I'm sorry, NUE and NUE. Let's copy that. Order entry saved. And just click this icon and it comes. So once you have entered the trade, just the same way I did, part by part, you can save it as a template. Let's say I enter this one and I want to save it as a template. I haven't done this in a while, as you can tell. Oh, that's not it. Okay, suppose that you have it here on the Analyze tab. I forget. Sorry about that. It's been a while. Anyway, I'll make sure that I can show you that next week. But you can save this as a template. Share order template. No, share is not what I want. I want to save it. Okay, I'll try that next week, all right? I haven't done this in a while. I saved my template a long time ago, so I know that somewhere you can save it here. So you can always ask the Thinkorswim people to help you with that. Okay, so I'm gonna trade this then. Let's double check. Yeah, the only thing here is the liquidity is a little too low. And you can see 16.4 versus 17.35. The difference is way too big. It should not be more than 3%. And that's the only thing that bothers me. Even the earnings here, it says do not trade, but that's very close to a 10% beat. And that's good too. Okay, so I'm going to enter it anyway. The only problem with something like this is you may have trouble actually getting filled because the difference is so big. But you're going to try the mid, and that's about it. If you can't fill it at the mid, don't bother. There will be other trades. Okay, so we keep it there in the gut fill because this is a paper trading account. It might be harder to fill in real life. Okay, let's check out, and as you can see, all my trades were filled, so we are done for the day. And so thank you very much for your attention, and I'll see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.